If you're planning to retire in the next few years, this story might just save your entire nest egg. Because Tom, a 64-year-old retired engineer from Mesa, Arizona, who had saved up over $687,000 in his 401k, almost lost half of it in just a few months. And the scariest part? He did everything right. Or so he thought. In today's video, we're revealing the top silent killers that can sabotage even the most well-planned retirement, and how Tom avoided disaster by taking just one simple action that most retirees never even consider. Let's dive in. Right now, the retirement landscape is more uncertain than ever. A new report shows inflation still hasn't cooled down, even as the Fed holds rates high, and recession whispers grow louder. Layoffs are climbing, the stock market is volatile, and the national debt just crossed $34 trillion, with no signs of slowing down. And in this environment, even a small mistake with your retirement money can have life-altering consequences. So let's break down the top retirement mistakes that catch most people off guard, and what you can do to protect yourself. Mistake number 1, assuming your 401k or IRA is safe just because it's diversified. Tom had a solid mix of index funds and bonds. That's what his advisor told him to do. But last year, both stocks and bonds dropped at the same time. His account fell by over $112,000 in just 6 months. Diversification within the market isn't true protection anymore. When everything falls together, the entire portfolio sinks. Mistake number 2, ignoring the silent tax bomb. Here's what no one tells you. Most retirement accounts are pre-tax, which means the IRS is just waiting for you to turn 73 and start required withdrawals. And by then, taxes could be way higher. Tom did the math. If rates go back to 2001 levels, he could lose over $22,000 per year just in taxes on his withdrawals. That's not a tax plan. That's a tax trap. Mistake number 3, trusting the system will just work itself out. Let's be honest. Do you really trust Washington to protect your retirement? Social Security's trust fund is on track to be depleted by 2033. Medicare is in the red, and every time we raise the debt ceiling, the dollar gets weaker. You worked hard to build your savings. But if you're relying on the same broken system that's already failing millions, you're putting decades of work at risk. Now here's the turning point in Tom's story. He talked to a friend who had gone through something similar, and that friend gave him one piece of advice. You need to look into a gold IRA. Tom took the free guide. No pressure, no gimmicks, just education. And it opened his eyes. Gold doesn't disappear in a market crash. It doesn't get taxed when the dollar falls. And it's been a proven store of value for over 5,000 years. He decided to roll over $412,000 from his 401k into a self-directed gold IRA. And today, not only has he recovered from his losses, he sleeps better knowing that part of his savings isn't at the mercy of Wall Street or Washington. If you've got $100,000 or more in an IRA, 401k, or similar account, you owe it to yourself and your family to explore this option. So here's what to do. Get your free gold IRA guide and a no-obligation educational call. There's no pressure, no annoying sales pitch, no free silver gimmicks. Just a quick one-on-one to see if this makes sense for you. Because the biggest mistake you can make in retirement is doing nothing. You've spent a lifetime building your wealth. Now it's time to protect it. Click the link, get your free guide, and start where Tom started. You've earned peace of mind. Don't let another day go by without it.